The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the December 14th magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us today. You and I will go take a look at the circumstances of these markets, what the bulls and the bears, the buyers and the sellers are communicating to you and I this afternoon. I want you to know that I'm absolutely grateful for your presence here. More importantly, I'm here to serve you. So feel free, pick up that phone, dial on in, 877-927-6648. Internationally, 727-445-1044, because this is Magical Monday. Of course, it's none other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 53 points at 17,318. S&P up 2.5 at 2,014. NASDAQ Composite back 6. She's traded at 49.27. Russell's down 5 points. Gold is off $12 right now, trading at 1063. Silver's down 18 cents. Light sweet crude is up 82 cents, trying to make that seventh wave move to the downside. She's trading at 36.44. Natural gas trading at $1.87. Leading the charge here to the upside, you've got Priceline up $12, Intuitive Surgical up 9, Amazon up 7, Puma Biotech up 7, Public Storage up about nearly $7. The largest percentage move is in Puma Biotech. To the downside, let's see, individual stock-wise, we've got Terra Biotherapeutics. That's off 28%, down $9.50. Chipotle is off 8. Affiliated Manager Group, AMG, which you like to see on the back of a Mercedes. But AMG, that's trading out at $7.49. That's off about 5%. Restoration Hardware down about $6. She's trading off $7. So the question is, because I did tell the folks in the den that I just got back from the North Pole. Santa was having his Elf on the Shelf conference out there. And luckily I was able to go ahead and get off that shelf, hightail it back here. I thought that Santa was still running the Concorde. Nope, something even faster than that. Faster than the speed of sound. So let's go take a look at these markets. Let's go see what they're doing out here. They're trying to bottom. Can you say Santa Claus rally? Well, you can, because you're here with me at TFNN.com. So let's go take a look at these markets, see what we're doing. Let's first start. Let's make sure we have our head wrapped around long-term where the markets are at. So let's go take a look at our long-term chart. Of course, the best one to take a look at is the New York Stock Exchange. We can take a look at the others as well. We're just really picking it up from where we left off on Friday. Here's what you and I know. The New York Stock Exchange right now is trading at 99.72. We know that price is right up against support, long-term support, both diagonal and horizontal. The diagonal support is the blue line going from lower left to upper right. That is the trend, and the trend is your friend, and we can see how price is trading really right on that. Additionally, we've got the horizontal trading range. The horizontal trading range, these are boundary lines that are set up. In fact, the width of those boundary lines they were set up long ago. Many years ago, and that price point level that it says is support, which it is, 99.62. We're trading 99.69, so it's just fluctuating a bit. So we've got price just really testing support, testing. Now, look, if I'm wrong on this, and Santa said, "Hey, we can't wait to get Steve-O out of there. Let him go do his show," then. And he's going to deliver coal, which is just now. I've got the in with the big guy out there. Then you'd see price move down to 94.04 or 94.84. That's the monthly horizontal trading range boundary line. But it ain't going to happen. I'm here to tell you so. Now let's go take a look. So that's what's going on. We're taking a look at a monthly chart, basically, but we're looking at weekly and monthly horizontal trading ranges and the long-term trend. The trend is your friend. The trend will continue to be your friend out there, at least during this holiday season. So let's go take a look at the charts that really have all the meaning in the world, or at least in my world, and now it's going to be your world. Let's take a look at the NQ out here and see what it's done. If we take a look at the NQ, what we can see is that price during this move here this morning was nothing more than a pretty good Michael Jordan move, and that price was moving lower, doing it with no energy whatsoever. Maybe a little bit, might scare the heck out of what do they call it? The bejesus out of folks. Maybe scare them a little bit, but the reality was moving lower with less relative weakness out there. These patterns are the ones that call all the tops, all the bottoms out here. Now, as we take a look at it, this candle that we're in right now doesn't complete until 2 o'clock. So come 2 o'clock out here, what we want to see, if you're a bull, or if you're a bear, look, here's what you're paying attention to. It doesn't really matter what side of the market you're on. But here's the deal. This candle, this nice big bullish engulfing bull sash candle, if it can do two things. Well, the first thing it needs to do coming in at 2 o'clock is be able to close above the open of that session. Let me move this over here. Now, I have been, since I got back from the North Pole, I have been struggling here with the, I don't know what is going on with the system. That's terrible. Well, I'll switch over to another chart where I can get the exact number for you. So give me, oh, okay. Well, that was interesting. So let me do that. So you're just going to have to bear with me just a tad as I work through this. And what we're doing is we're going to take a look at the NQ. Obviously, we're on the March 2016 contract. And the number, that's the ES. I know you want me to get the NQ out here. Let me pull that up. Oh, by the way, we can also see the A to B equals CD down that the NQ completed out here, 1 to 1.272. And what you're looking for, the open really of the last trading session, which was 4522.75. So any close above that at 2 p.m., what you've got is a bullish reversal signal at the end of a couple different patterns out there. So if you see that, and then on the 120-minute time frame chart, what you're looking for is there's a new market profile. There's a new sheriff in town. And that sheriff says if by 4 p.m., you see a close above 4539.25, that's just going to give you an additional confirmation message that the market is ready to begin that Santa Claus rally. It's going to last here for, it's going to last here for several days. But it's going to be a nice, big, juicy rally. Now, if we take a look at inside the NQ specifically as an example, and there's really a couple different patterns. We're going to take a look at the ones that are out here right now. If we take a look at the NQ, where this thing could bounce to, let's take a look at, let me grab the right tool out here. We're going to take a look at retracements. So let's go take a look at the retracements out here. And this is going to be from the high to the low of this A to B equals CD. You're looking at the first move, 45.68. Next move, this is really where it's headed to, 46.27 to 46.70. That is, and you're at, what did I say? You're right around the price point of 45.32. It's a pretty healthy move. 130 points or so inside of the NQ. If we take a look at the ES, let's do this here. We're going to go to the one chart that just easily shows you that price relative strength divergent pattern. Only in this case here, we're likely inside that seventh wave as well to the downside. So we're getting that confirmation. So there's an A to B equals CD. We'll go back and take a look at that on the other chart. So we've got, in essence, 3 patterns here that are setting up, that are knocking on the door. They're knocking on the door. And what they're telling us is that the market is ready to bottom. So we've already got the nice little bullish engulfing candle. It needs to close above the open of the last candle session out there. We've got its market profiles right around the 2001 level. You're trading at 2125. If price can close inside there, you're looking at a move up to about the 2019 area, 2020. Now, it doesn't have to do all of these things today. We just simply, you can see price was moving down with less relative weakness out there. That is, as Tom likes to say, that's a beautiful thing out there. So now let's go take a look at where the ES Mini is likely to bounce to. Let's go just simply take a look at some Gartley buy pattern. It's an A to B equals CD. That's completed out here. Let's go take a look at that pattern. Now what we're going to do is we're just simply going to go from the high of that A point out here That's at 2,088.75. So let's go from the high of it all the way down to the low that came in here during the morning session, and you're looking at a bounce to 2,048. 2,066. I think the 2,066 level maybe gets all the way back to its highs. But the first level that it's got to get above needs to close above 2,016. Actually, it's a brand new market profile. Looks like that just showed up on my screen out here. Do I have the right? Yeah, I got the right contract. We got everything. Then it would be 2023, then 2048, then 2066 being the levels for the ES to go to. But let's not stop there, because the message is really, it's really across the board on this 2-hour chart out here. And if we take a look at what's going on inside of the Dow, we're going to see, in essence, the same pattern out here. We're going to see that it was moving lower, doing it with less relative weakness. We had a couple of doji candles out there, really two back-to-back. One's a highway, but truly, a doji-style candle. Market's getting tired. You've got a nice big old bullish engulfing candle now. You can see that it's a TAS market profile. Looking at the black and the blue horizontal lines across my screen, you can see that those are really set up in bullish formation out here. So in essence, the next move inside the Dow futures contract, 17,313. If it overtakes that today, and I don't know that it will, but if and when it does, that'll just tell you you've got another confirmation of price moving to the upper east side, right? Because the upper east side is going to be the east side of the chart that we're taking a look at. If we go take a look at the Russell 2000, again, you're going to see the message firmly across the board out here. Again, price moving lower, doing it with less relative weakness out here. Now, on the Russell 2000 chart that you and I just took a look at, we've got about 10-minute delay inside of the price that you're taking a look at there. So inside those 2-hour charts, we see the same patterns that are in play out here, and that suggests to me that the bottom has begun. Now, let's take a look at the other side. What if, in fact, I don't have a gosh darn clue as to what's going on out here? What if I'm just wrong? What if the market interpretation is just dead solid wrong? Then what do we have to fall back on? That's always a good question. What I would do is just simply go down to the next time frame that we like to take a look at. And so that would be taking a look at what's going on in the 5-hour time frame out here, right? So you just simply go to the next level out here. Now, inside the 5-hour time frame, this candle here is going to also complete at 2 o'clock. This is not showing us any kind of bullish reversal signal. And in fact, in the 5-hour time frame, prices moved lower, and it's done it with strength out there, right? It's done it with strength. But where I believe that we want to be focusing on is the 2-hour chart out here. But with regard to where else could price go to, we just simply go back to these A to B equals CD patterns. So let's take a look at inside the ES mini. If the level that it's trading at, in essence, right now begins to fail, let's get rid of this retracement area. What you're likely to look at is a price move down to, hey, maybe it can push down to 1979. It could even push down into 1957 if, in fact, the patterns that you and I are taking a look at fail out here. Remember, there is no certainty inside of the market. I take that back. There's one certainty. If you use stops, if you use exits, if you have both sides of the trade planned out, that's where you get your certainty from. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 10, S&P's off a point, composite down 11.11. Ooh, it sounds like somebody is at the craps table out there. It must be the NASDAQ composite. So we've got three questions that have come in here during that break, or that I've been able to look at during the breakout here. One question was, I mentioned sometimes bullish or bearish reversal signals. Here's what I've learned. There are a lot of great trading strategies out there. We teach most of them to you here throughout the day at TFNN.com. And when I started out in this business, when I started taking a look at these different trading strategies, let's take a look at the lightning bolt as an example, as one of those trading strategies, because that's what we were looking at earlier on the 120-minute time frame chart out here. Take a look at the NQ as an example. And you may say to yourself, what the heck is a lightning bolt and A to B equals CD? It's what it is. It's a pattern that allows us to project price, where price will head to. And we do that by just simply taking a look at swing points. Swing points become, this is where this pattern is beautiful, because the market does 75% of the work for you, because it's going to give you your anchor points for your A, your B, your C, and your D. You're just simply looking for those swing points where you see the largest trends that are in place. And within sight here, there's other patterns as well. What I will tell you is that the A to B equals CD pattern makes a 1-to-1 only 60% of the time. Now, mathematically, I haven't gone back there to do the accurate test to prove that it's 60% versus 58 versus 63. But you can use that as a real good Jack Sparrow guideline out here, that only about between half and 60% of the time, Is that move going to be a 1-to-1 A to B equals CD? That's why, for goodness sakes, don't buy and sell every A to B equals CD. Instead, what you need, and this applies to every single pattern that is out there, you need the market to communicate to you. We'll just use Tom's terminology, squawk, walk, and talk. The way that the market squawks, walks, and talks to us is it provides us with bullish or bearish reversal candles. You need to know which ones are really legit, because you can pick up any book. I'd say go pick up Steve Nissen's book. That's a great book out there. That'll educate you, but it won't teach you how to trade. That's the problem. There's 30 odd signals out there. There's only a couple of handfuls that you really need to focus on and pay attention. So how do we know when the market is about to change? We know because the cavalry shows up. And the way that the cavalry shows up is it paints those bullish or bearish reversal signals. In the case of market going higher, it'll paint a bearish signal for you. You like to see some additional follow through. Do they work 100% of the time? No, but it works one heck of a lot more than just simply saying, it made a 0.618 retracement, a 0.786 retracement, an A to B equals CD out there. It made this wave, that wave. The way that the market communicates to you on all time frames is simply through bullish and bearish reversal signals. If you want to trade, if you want to understand the message of the markets, you just need to go out there and learn how to do that. And there's no better place and no better way to do that than to make an investment in yourself. So whether it's through books, whether it's through workshops that we have here at TFNN.com. I've got workshops that you can use Tiger dollars for. You can buy Tiger dollars right now. The best investments, this. I'm not going to belabor the point. The best investments you've ever made in your entire life are investing in yourself for more education out there. If you want more, you have to become more. That's the only way that each of us can do that. So I hope that answers the question with regard to a bullish or a bearish reversal signal. Another question that came in asked me if I would take a look at gold and silver, so we will. And then the other question was, is this just a one-day bounce in light sweet crude? Let's take a look at light sweet crude. We talked about this, I think, on Friday. Now, this is a continuous contract that is on my screen out here right now. And here's what we know from the high inside of light sweet crude that took place out here on the trading day of October 9th. We can see that if we just simply take a look at our Chapman wave counts to the downside, the one that Stevie likes to focus on is that seventh inning stretch. I find that one has the most meaning because it tells us that the market is simply stretched and that rubber band has been pulled so much that it's ready to potentially snap back. It also gives you the easiest trade out there because your stop is right below the low of that seventh wave. Now, the problem is that we are still in the seventh inning stretch. This could go on tomorrow or the next day. We've been in that seventh inning, that little G count, if you're taking a look, if you're watching us on TigerTV, for the last 3 trading days. But today, though, and I don't know how the day's going to end. It just depends on how the contract session closes here electronically. Right now, you do have a bullish reversal signal. It's not the strongest of them, but you do have a little piercing candle that has shown up while you are in a seventh wave. So the answer is, if we get a bullish reversal signal, then no, it's not a one-day bounce. But I don't know if light sweet crude is really the sandbox that you want to be playing in out there. Potentially the most manipulated market out there. I just don't know if that's truly where it is you want to play. I don't know if gold or silver is either, but when we come back to this break, let's go take a look at Goldilocks and hi-ho silver. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 7, S&P's off a point, and we're going to go take a look at gold and silver out here. And as we take a look at gold, I think the most useful chart is an intraday chart as we speak right now. We took a look at this pattern here on Friday as well. Now, I've got the 120-minute time frame chart on my screen just because it's a little bit easier. You know, we don't have as many candles. But if we were looking at the 10-minute chart or 30-minute chart, we'd see the same kind of pattern out here. First, the one thing, let me do this. It's easier if we just simply start with a clean palette, I think. So if we start like this, we just take a look at the chart like this, because candlesticks communicate so much to you and I. The one thing that stands out on this blank chart out here, or should stand out on this chart, is this wide-ranging bar right here between 8, since it's a 2-hour chart, between 8 and 10 in the morning. That was on December the 4th. Now, we don't know what caused that wide-ranging bar, but it's the widest ranging bar. That says at the bottom of that or near that area should be support. And what we know is that as price was pulling back into that area on Friday morning, 4 o'clock, as well as between 6 and 8, and then from 8 to 10, we saw that price went ahead and took off from that level again, creating another juniorish wide-ranging bar out here. So, that's the first thing that your eyes ought to be able to go take a look. Are there some wide-ranging bars? Are they to the upside, to the downside? What has happened as price has come back to those wide-ranging bars? If they were to the downside, tells you, sellers are camped out there. If it's moving to the upside, tells you that we've got support out here. So that's one way to take a look at it. What I also notice out here is I kind of see this little descending tops, this little price channel out here. So if we go ahead and we put the price channel up on our screen, we can see that, and whoa, what the heck did I just do there? Okay. I don't know what I did. There we go. We'll go ahead and blow this back up. Okay. Yeah, okay, so we're good. Although I don't know what the heck I did there. In any event, we're back. So you've got, and when we take a look at price channels, you can use trend lines. Trend lines, you're going to use the top or the bottom of the candle session. And channel lines, we're just simply going to use the bodies of the candles out here. And what we can see is that even though we've got this breakout, there's a lot of non-believers out here. And so gold is taking its merry, sweet time in really being able to break out and do its next move. So if we take a look at what price is likely to do as we speak right now, it's probably going to come down and test, may test the bottom of this price channel out here. That says it could, depending on what time period, could be around 1060. As a price level that we could see. Does it have to actually get down and test it? Not necessarily out here. If we put another tool that helps us identify support and or resistance, we've got the nice little TAS market profile system out here. Now we can see that the bottom of the weekly profile is priced at 1060 and 10 cents out here. So what gold ought to have is it ought to have really strong support at the bottom of this descending price channel, ought to have really strong support at the horizontal level of its weekly market profile, 1060. Until it breaks through that area, our assumption must be that there is accumulation going on out here, that price is really up against support. And when price is able to break through the top of this descending price channel, assuming that it can do that, then gold ought to be on its way up. First, it's going to have to pay its respects to the TAS market profiles, both the bottom of the daily box and the point of control for gold. You've got to expect that's a little bit of a tough area to get through. That sledding area is right around the 1091 area. And then when price can get above that, it's on its way to 1104. Yeah, the 1104 level. And then once past 1104, 1117. And that's and if price breaks to the downside inside of gold, well, we come back to the daily chart. And we come back to the daily chart, and that says that, in fact, gold could get all the way back down to low of December 3rd, and that would be down at the 1045 area. So that's really to the upside, to the downside. At this stage of the game, prices, if we saw it close below 1062, even though that is still just above the weekly profile, I would start to get a little nervous out there. And then 1060 would be an additional message that says you go back down to the lows. That's not the message that we have as we speak right now. If we go take a look and see what silver is doing out here, silver, which had been stronger than gold for a while, let's go see what it's doing. It clearly is not stronger than gold. This is the current contract out here. Now, where is silver headed to? The best thing that I could do to try to anticipate where price might head to is just take a look at expansions of swing points. You and I took a look at retracements earlier. Now we're going to take a look at an expansion, which is a low from August 26th to the high out here on the trading day of October 28th. And that expansion says that silver could easily make its way down to the 1335 level, your 1369. So, that's a fairly decent move to the downside. But short of, I don't see anything out here that suggests that it would do anything different than that as we speak. So looks like 1335 may be the move to the downside. Maybe gold doesn't get its work done to the upside until silver gets its work done to the downside. And if I go to a real short-term chart here for Goldilocks, Goldilocks, a real short-term chart being the 30-minute time frame out here. We can also see that, remember the last bottom that you and I looked at, even though it was on 120-minute time frame, well, we see out here that same pattern where price was moving lower, doing it with less relative weakness. This was back at about 6 o'clock in the morning when that pattern began. That was back on December the 11th out here. We can see the price is doing the same thing as we speak right now. So as gold comes down into these levels, these breakout areas here, what we can see is it continues to move lower with less relative weakness out there. So hopefully that helps you with regard to gold and what it is doing. If we go take a look at some other elements inside the market, let's take a look at the VIX index, see what she's doing, pulling back just ever so slightly right now, trading at 23.29. We can see, no, that's the contract. Okay, I'm sorry. I was looking at the December contract. The VIX is trading at 24.31. Aha, I gotcha. If we take a look at what the VIX is doing, price at 24.31, it is above all of the futures contracts. And this is one that's taken us out into August of 2016. And that's not logical out here. That says that that all this movement and all this fear out here, it's not warranted. At least with regard to the way futures traders are taking a look at inside the VIX contract, they're saying it's going to go away. So how's that poem go? I don't know exactly how it goes. I'm not going to do it, but rain, go away. Fear, go away. So the VIX index will get back in line out here. It'll pull back. Where will it pull back to? That's an excellent question. It's going to pull back to 1777. You're at 24.32 as we speak right now. Maybe it pulls back below that, but on that move down to 1777, that's going to put a lot of liquidity, not a lot of liquidity. It's going to put some energy into the markets as they go ahead and move higher out there. So it's unusual. It's not normal for the VIX index and the futures contracts to trade like this. So there's an important message that comes from it for both of us. That's assuming there's only one person in the audience that's actually listening out here. If we take a look at the advanced decline oscillators, they are all down at the extreme oversold reading out here. NASDAQ Composite, let's just focus in on that one as we speak right now. What do we know about the NASDAQ Composite? Well, let's first go take a look at different retracement levels. Let's go see what message they might have for you and I. Those retracement levels, let's first take a look at off of the August 24th low to the high out here. Looks like that high was on trading day of December the 2nd. If we use that, the NASDAQ Composite hasn't even done a dead cat bounce, hasn't even made a 0.382 retracement. That's all that the sellers have? That's it? Now, they pushed it down into that extreme oversold reading, so price is going to go ahead and bounce from here. Now, like whether it's today or whether it's tomorrow, price is going to bounce. If we take a look at levels inside the NASDAQ Composite, where is it going to? Probably all the way back up to the highs. The highs here from December the 2nd, I would say as a likely target, or first target's going to be 49.88. Second target, 50.60. After that, 50.11. It gets about 50.60. It gets all the way back to the highs of about 51.76. So you're in that extreme level. Your Dow reading is minus 69.60. You get down below 65. Look, the most extreme reading we had was back on August 24th. We don't have that kind of fear going through the marketplace. That was a minus 93 level. Hasn't turned up here just yet, but really, even if I use the retracement area coming off of the swing point from September 29th, I believe it is. That would be, let me grab this here. That's this session, yeah, September 29th to the high out here. In that case, it's done just a dead cat bounce, a 0.382 retracement out here. So, and it's really come back into an area where price had broken out. Let's go take a look at just for the heck of it, let's go take a look and see what we're doing volume-wise inside of the ETF structures out here. Let's take a look at the Qs, although the Qs don't really match the NQ out here. Let's just go see what we've got going on. So in the case of the Qs, it's rejected. It's come back to the breakout area. That breakout area was on October 23rd. We had wide price spread out there. That price spread began at 109.80. The volume on that session was, well, I'll tell you what it is as soon as I turn it on. I think we're dealing with, 53 million shares or so? 53 million shares. You've done 37 million shares today. Last time down was with 33 million shares. So we've got basically your good old-fashioned consolidation pattern, in essence, going on, consolidating up at these highs here inside of the Qs. If the Qs can stay above 109.80 out here, volume or not, they're done going to the downside. Where are they going to run back up to? It's really in the consolidation. So I'd have to say it runs back up to the 115.47 level out there, and that's what's going on inside of the Qs. We might as well stay inside the ETFs out here. The ETFs, let's take a look at the IWM. If we take a look at the IWM, and I did just get a message from Santa Claus. While I was up at the North Pole, I did see polar bears out there, and that is a beautiful thing. So it's actually one of those polar bears, another one of Santa's helpers, that is telling me where Apple is going to head to. If we take a look at the IWM, she's come back in to test the swing point, or the breakout area is really what I should say, from October 5th. Volume there was 45 and 58 million shares. You've done 35 today. We've got that long-term trend line that it's up against as well. If we take the IWM, I think we put this on a monthly chart. Is that what we've got, monthly or the weekly chart? You can see that price is really right up against the support area. So just like inside the NYSE, which is finding support, so too are the small caps out here. Let's go take a look at the Apple off of $145, trading at 111.72 out here. I didn't get the price projection of where Apple's headed to, but you and I, we can go figure that out. If Apple, which has got a little hammer candle today, even though it did gap down, but what Apple is doing is, it's not really, it's testing this, is it testing the swing point? So the last hammer candle that formed inside Apple was back on October the 1st. Now, the high of that session was 109.62. The low today has been 109.79, so it hasn't gotten down. But it tells you, it communicates to us. See these little, let me do this. Let me turn off the market profiles, make it a little bit easier for you to take a look at. Let's turn that off. Let's turn, I don't need to turn that off. Let's turn this off, this off. There we go. And so you see these candles down here. They're small. There are little nuances, but they help you to understand where the bulls and bears are defending their territory. Now, in the case of Apple, you got a nice little hammer candle. That's right here, October the 1st. You've got another hammer candle down here. Probably qualifies as a hammer candle on October the 8th out here. The one here on October the 7th, not so much, because the price was really moving up. And today, as we speak right now, you've got another hammer candle. So what I can tell you is that in the price range of about 107 to 109, we'll call it 110, this is really where the buyers are defending their territory. Now, that doesn't show up on any of the market profiles out here. We can see that price is below the daily, just slightly below. It looks like that's priced out at about the 118.57 level. No, 112.08 level. And you are priced at 111.78 out here. But I have it on good word out here. I've got it from one of Santa's best polar bears that Apple's going to go up and test its high. So what would that be? You'd have to say that what Apple would do. So if Apple's going to bounce from here, which it should. So let's take a look. I'll go ahead and turn off the daily profiles. Let's get rid of that. Let's clean it up. Where's the logical spot? So when you take a look at this chart, where's a logical spot that you would draw a horizontal line to identify where the natural area of resistance is inside Apple? You're exactly right. I heard you say that, and you said, Steve, draw the line. Let's make it a red line out here. And you said, draw that red line right where Apple had gapped down. That's exactly right, where Apple had, in essence, broken down, so to speak. Now, the volume on that breakdown was right here on the trading day of November the 10th. That had 59 million shares. We can see as Apple has tried to get up into that area, what it's done is found resistance, 120. So where's Apple headed to? Apple is going to head to the 120 level out here. And, you're basically inside a trading range, which we said was in the 110 to 120 area. This is Steve Rhodes with TFNN. Dow's off 9, S&P's off 4. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 4, S&P is down 3. I love that. The question was, what do polar bears eat for lunch? And the answer was ice burgers. I love it. Extra points on that one. Another email question here said, will natural gas and oil bottom around the same time? And I don't know the answer to that. We looked at the light sweet crude continuous contract, and we can see that seventh wave move that's in place out there. It's the only pattern that I've really been able to find that says oil could bottom before it tests the 2009 swing point low, and we're really still in it. In the case of natural gas, I don't have that same pattern set up. It did bounce off of a seventh wave move out here. This was back on the trading session of October 27th. And, for all intents and purposes, that should have been the place where natural gas found its bottom. It didn't. It had about a 2-week trading session, 2-week move higher, and then just simply proceeded to give it up. So I don't have any patterns out here inside natural gas. Certainly going to be weather related, and I guess it's been pretty warm in the Northeast out there. So El Nina. Best person to ask on that is going to be, I think, Andy Heck out there, because that way you can take a look at the fundamental, because technically speaking, I can't find any pattern out here. So that's what I would say is right into Andy and listen to the show tomorrow. He'll give you a better feel. With regard to where we're at in the markets here, look, there is an absolute bounce that's going to be one of those where, you're hearing everybody talk about how bad the markets are and everything. It's going to be a very good, healthy bounce. And when you take a look at that bounce, it's going to take the New York Stock Exchange up to a fairly high level as well. So whether that's starting today at 2 p.m. or at 4 p.m. or early in the morning, and it's not like it's just a small little bounce out here. The last piece of evidence that we can take a look, we don't have a reversal signal, but the currency pair, the Euro Japanese yen, your friend and mine, continues to show ambivalence on really trading below its dead cat bounce. It's 0.382 retracement level. I believe on Friday, Maria and I from New York took a look at this. She was one actually that picked up on it. So I appreciate that. We can see prices still. She was looking to take the long trade. We don't have the bullish reversal signal, but you could easily get it today because of that small little doji style candle on Friday. Price tried to push lower here earlier in the morning. It has fought its way back and would be very easy to get a bullish reversal signal today. And then we just simply will pay attention to trend lines out there. With regard to, take a look at Apple. Apple's now only off 69 cents out here. So, nice big old day. The beautiful thing about Japanese candlestick charting, used properly, is I watch a lot of people that do not use it properly. And so you got to invest in the resources in order to do that. And it would be like, picture, what does it mean to not use it properly? You ever see My Big Fat Greek Wedding out there? You got the younger brother and his cousin, and they're telling the guy that's marrying their sister, they're telling him phrases in Greek. He was communicating in Greek. So you can communicate the candlesticks out there, but he's communicating the wrong message. And if you communicate the wrong message, it's, you're going to end up in the wrong spot. It's going to be like following a set of directions, only you're going to say, well, how did I end up here out there? So, just make sure that it's the best thing that you can possibly do. Look, folks, do yourself a favor. Somebody is going to ask you, what do you want for the holidays? It's very simple. Just simply tell them you want the gift of education. Go get Tiger Dollars. Sign up for a newsletter service. Doesn't have to be mine. Sign up for a workshop. Doesn't have to be mine. I'd recommend you do that out there. There is no better educator than here at TFNN. So, folks, stay tuned because the next educator is David White. He's up next. Have a magnificent, marvelous Monday, and I'll see you on Turnaround Tuesday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.